Hey guys, welcome back. In this video, we are talking about how Robinhood is trying to stop AMC again, the gamma exposure increasing, the squeeze trigger for AMC, and many more in this video. First, we're taking a look at this. Something that we have been highlighting a lot recently, and we know is how smart money or these institutions that have been accumulating AMC. When you take a look at some of the share changes, we're seeing companies like BlackRock increasing. We're seeing companies going from 3 million to 32 million shares. And of course, all of these other companies that are not only not decreasing their exposure, but actually accumulating even more. On top of that, we have also seen how short sellers of AMC have bought into shares as well, like Citadel, who have 6x their positions into 20 million shares. And so what we talked about recently and what we've seen is how there is a massive bullish projection for AMC and the institutions are trying to accumulate. Now, this has obviously brought problems because of what that means for the apes. And we know that when we see these institutions accumulating, we know that the articles that they're trying to release are obviously lies to try and push the incentive for apes to sell. And we understand in terms of what this also means for retail traders who are trying to follow the institutions. And Robinhood recently has had a massive delay in terms of updating the buying of AMC. You can see what we saw was the fact that they delayed the results. And the big reason for that is because for Q2, you can see kind of the ratio between shares being bought versus shares being sold. And this is obviously a massive indication of truly what they think about AMC. And of course, what we can understand with why more and more institutions are buying and how this is going to encourage other retail traders outside of the ape community to also buy into AMC. The very fact that we're already trying to delay it is showing how they're trying to take away any volume, any pressure, and kind of just any bullish sentiment away from AMC. But it doesn't stop there. We've obviously seen what Robinhood has done to AMC in the past, and they're trying to continue this streak. So not only did they firstly delay the update on hedge funds and institutions buying into AMC, they've now removed it of any sort of data between Q2 in buying. And this is obviously extremely ridiculous because the fact that you see how big of a change this was and just how much shares were being bought, you understand why they're trying to do this. So it's no surprise to us that once again, they're trying to remove any positive news about AMC. And the reason why they do this is the same reason in the past before. The people that they work with, the institutions, the market makers that they work with can't have any bullish news on AMC. And so by removing this, for anyone who doesn't keep up to date with AMC, for any retail investors or any apes even who doesn't keep up to date, they won't see the fact that we are seeing so many institutions trying to accumulate. Even the short sellers, like we talked about, like Citadel, who have also bought into AMC. So this is once again another example of how the brokers are not trying to help us, and how we also know that precisely by doing this is showing the fact that we are doing something right. Another big thing that relates to this is obviously because of the gamma exposure there is for AMC right now. You can see the options for AMC and you can see the amount of calls that will go in the money at these various strike prices to have increased in the amount of volume. And this is something where we understood in terms of the shorts are worried about this because they've realized how easy and how possible it is for AMC to reach these prices. When you see what the market understanding is right now, when you see how well the box office is doing, when you see how well AMC is doing, it wouldn't surprise us to see AMC going up, and it wouldn't surprise us to see even more people buying in. And so that all equals to AMC going up. And when we see AMC go above 250, when AMC goes above $3, you can already see how many calls will go in the money. So the fact that we are seeing these gamma exposure increasing, and then all of a sudden we're seeing how they're trying to remove any bullish pressure once again away from AMC, this is just another confirmation that we are putting the dent into their liquidity, that we will have a massive effect when we do see AMC close above these prices. And it's why we've recently seen how they're really trying to push this agenda of getting AMC to $2. Because you can see even AMC closing at 250, the amount of calls that will go in the money, when AMC closes above $3.50, $4, the amount of calls that will go in the money will be immense. Not to mention the domino effects that this will have. So they're really trying trying their best to avoid the gamma squeeze right now, where they're outright trying to, it's the equivalent of removing the buy button, because by not showing any positive signs on AMC, it's just trying to take away what people could actually see. And to me, it's just taking away a free market where people are trading on the same information, or if not, even if it's lagged information, it's still information that could really change people's opinions. And so this is why they're doing this. And who's going to be obviously on top of all of this in terms of the short sellers who are worried? Well, it's companies like Citadel. Now, whilst they have obviously gone long on AMC, it isn't to say they fully cover their short positions. And to our understanding, they will never be able to fully cover their short synthetic positions because they have created billions of positions already that they can't cover without the price 100x, 1000x. And one of the things we see is that they want to manipulate AMC to $2 because they want to steal the monthly option contract premiums and reduce volatility. We already talked about this. Where AMC closes above these strike prices, the amount of gamma exposure, the amount of bullish volume and volatility that it's going to bring would obviously be massive. That's the first thing they're afraid of. The second thing is by potentially trying to increase, in terms of encouraging people to buy into these options, is that they're obviously collecting a premium to them, which they can then short AMC with the premium collected. Now, this isn't me telling you to not mess around with options. Again, whatever you want to do is whatever you want to do. But the very fact that we are seeing them right now in terms of who's going to be affected the most by AMC closing above $2 or above $3.50, above $3, it's once again Citadel, the biggest, if not one of the biggest short seller of AMC. So this is how we understand that right now, with all of the gamma exposure that's ongoing right now, with all of the bullish momentum on AMC right now, is definitely taking a toll towards these market makers and short sellers, to the fact that we're trying to cooperate with the brokers once again to steal any sort of momentum from the retail. And whilst we're talking about this, the Rediff AMC narrative is overwhelmingly bearish, while the fundamentals keep improving. Record Q2 and record quarter to date for Q3 and better operating performance. Now, this is kind of just going back to what we've said earlier. The reason why we're seeing this isn't actually because AMC is going through a bearish period, isn't actually AMC seeing any bearish news, because when we take a look at the news, nothing of the sort is showing right now. The only thing that we are seeing right now is how certain movies are doing even better than expected, is how the box office is growing at a rate not expected, is how AMC is improving efficiency and just breaking record EBITDA, breaking record quarters. And so when we see this, we have to understand what the stone cold truth is. And that's the fact that AMC is doing extremely well. And the reason why we're seeing these bearish news ties back to what we were saying. It's because they're worried about AMC going above certain strike prices, which is going to cause the gamma squeeze, which is then going to lead to the short squeeze. And that's what they're trying to avoid by using kind of these revenue or avenues where it's gaining media attention and they're trying to push the bearish narrative. Because if you want to tell me a bearish narrative, you have to come up with actual facts. And if you're talking about anything like bankruptcy, if you're talking anything about decreasing revenue or any of the sort, we know that that is not actually the case. And the overall, whilst we say that, is because the apes understand everything that's going on. Because it's uplifting to see people widely excited about AMC's prospects, AMC's profitability, and our going to the movies will collapse the criminal manipulation on the heads of those responsible. So whilst they're trying to push these media articles and kind of trying to push the media spotlight towards the bearish news, remember, the people they're trying to target are the whales of AMC. More importantly, the retail, the apes of AMC. But the true apes, the ones who are investing into AMC, the ones who understand AMC, you know exactly what's going on right now. Just like we've mentioned countless times already, box office is going up, AMC becoming more efficient. We know what's actually going on. So yes, they can try and push all of these narratives, but at the end of the day, the ones who are invested in AMC, the apes who have been here for a very long time, understand exactly what's going on. It's just a shame that they're trying to target potential new apes or any potential retail investors and push this narrative that AMC is a bad company so that it gets them to stay away from it because they can't afford to have any more bullish pressure. And remember this, one record-breaking event won't trigger MOAs overnight, but multiple record-breaking releases, record quarters, improving cash flow, and debt reduction tells a much bigger story. So whilst we are seeing AMC going down 3.48%, whilst we are seeing these articles that are trying to push a bearish view and kind of trying to persuade the recent investors to stay away from AMC, you got to remember, AMC is going to release more record quarters. They're going to release more record attendance, more record profits, and just overall bullish news. And they won't be able to hide that. And when people catch on to what's actually going on, that's when you're going to be seeing how the people are going to be starting to buy into AMC. And that even if they're trying to hide the institutionals buying into AMC, even if they're trying to use Reddit to push a bearish narrative, they won't be able to do so because everyone would know what's going on. They won't be able to hide the fact that AMC is doing extremely well. And if we see here, this is what matters. The number strongly favors a bullish thesis. Because if we take a look at what's going on right now, AMC is doing extremely well. We've already talked about where the domestic box office is tracking. We see how well Q3 alone has done. And remember, this directly affects with AMC. And so as we see this grow, as we see this increase, you're only going to be looking at a more bullish view. Even on kind of the lowest standpoint for where AMC is going to go, it is still actually good. It isn't a point where if we get the worst case scenario, AMC is not going to have an increase in revenue. It still is. It's just a matter of, are we going to increase by 2x or are we going to increase by 10x? And that's when AMC is really showing the difference between the kind of the monopoly of the market versus what they're trying to make AMC to be. Furthermore, another big thing I think which correlates with AMC right now is when we take a look at what the July inflation in terms of what it was, the PPI, and then we see what the odds of rate hikes are, is declining. And now that's actually a good thing for us. The reason why I say this is that whilst the debt payment isn't something that's detrimental to us right now, these still carry on effects. But if we are also seeing for this to be encouraging people to actually then go and spend money, especially in industries that is encouraging, aka the theater industry, that's also something that's going to be good. But I do believe that this is also going to allow AMC to have a more of a strategic move in terms of if they want to borrow money or if they want to make certain investments. I still think that this is something that is going to positively affect AMC. Whilst it's not as major factor as it was previously, it is still something that's on the side of AMC. And so when we take a look at what should be happening for AMC, after the countless amount of good news that they have released, we have to understand we should have more volume at these prices, much more. But the very fact that we are seeing the low volume, it feels like that's something it's going on behind the scenes. It could potentially be deals being made, mergers, new acquisitions. But the fact that these volume are drying up is abnormal. Now, this could also not be AMC related, where it's because the institutions are running out of money. So they can't constantly manipulate it with the high frequency trading algorithms that they previously have. They can't continuously make the same amount of synthetics as they were before. So the very fact that we are seeing volume drying up is very suspicious, and it could either be something that AMC is directly doing, which is going to be a huge major deal, or is a reflection of how the shorts are being worn down by the apes, and they're really struggling to try and keep the price at a very low point because they're failing with the liquidity to create the synthetics and the manipulation. Now, another big thing about this is obviously because of the dark pool. When we take a look at this, 1.95 billion AMC shares traded off exchange in just 77 trading days. And this is obviously a big factor because kind of going back to what we talked about at the very start, the fact that we are seeing these institutions accumulation going way higher than what we're expecting, we have to understand is that it's very likely that they're still trying to do a lot more deals in the dark pool. And the very fact they're doing this means they want to buy AMC shares, but they can't afford to buy AMC shares that will allow the price to go up. And I think that's already a big tell of what they think in terms of how explosive AMC truly can be. And I think that a lot of the things that we're seeing right now are all just indications of where AMC is going to go in the future and just how big AMC is going to get. On top of the liquidity issues that we're mentioning right now, especially the fact that they're failing to kind of suppress it, it looks like they want to launch overnight stock trading from 9 p.m. to 4 a.m. in December. Now, I definitely think that this is something that they're trying to do to encourage more liquidity. And by doing so is because they're trying to increase the value in certain stocks and therefore to increase the value in collaterals. One of the things that we talked about recently has been because the reason why they're failing to create as much synthetics as before or have the capital to manipulate AMC as much as before is because they're seeing so much value in collateral dropping. And because of this drop in collateral, they will need to find it elsewhere. And by encouraging an increase in the amount of time for overnight stock trading, it just looks like another method to do this. And another case of this is the fact that we're seeing how private credit funds are trying to sell more investment grade bonds than initially targeted. Now, this doesn't have anything to directly relate with AMC, but it's a showcase of the liquidity issues that we have been highlighting. And liquidity, it's something that's affecting AMC because liquidity essentially equals to the amount of money that will have to firstly create synthetics or manipulate AMC through high frequency. So if we are seeing a struggling for liquidity right now, it shows and explains why we are seeing the decrease in volume and why they're worried about the explosiveness that's about to happen from AMC. And it's ultimately going to be the squeeze trigger. And another thing is that they're trying to say that they're bracing for a more volatile period ahead, where we're seeing companies like Nvidia and of course other companies to have these massive daily implied moves where tying back to the collateral issues that we were talking about, is trying to encourage bullish momentum in all of these stocks that was once used as collaterals that were in the same basket as AMC. Because if these stocks that are in the same baskets as AMC doesn't go up, they won't have the ability to push AMC down. One of the effects that we've seen, one of the data that we've seen is that the stocks that are tied up in the same baskets as AMC, when they go up and the long shares are going up in value, AMC goes down in value. And this is what we've seen. So the very fact that they're trying to push these stocks once again, it's just another showcase of how they're trying to manipulate AMC down. As always, none of this is financial advice, and I'll catch you guys next time.